$34 trillion. That is the combined wealth of the top 1% of Americans. 1%. 1% of the people in this country control more wealth than the bottom 90% combined. Let that sink in. We are told America is the land of opportunity, that anyone who works hard enough can get ahead. But what if the game was never designed to be fair? This is the story of how wealth in America became the most unequal it has been in over a century, and why it matters to every single one of us. For a brief moment in American history, roughly from the 1940s through the 1970s, something remarkable happened. The United States built the largest middle class the world had ever seen. Factory workers bought homes, their kids went to college. A single income could support a family. That world is gone. Today, the average American worker hasn't seen a real wage increase in 40 years, adjusted for inflation. Meanwhile, the wealth of America's billionaires has grown by more than $5 trillion in just the past decade. Top 1% wealth share, 38.5% of all U.S. wealth. Bottom 50%, just a 0.5%. Median worker wage, inflation adjusted, nearly flat since 1979. So how did we get here? This isn't an accident, it isn't bad luck. It is the result of decades of specific decisions made by specific people that moved money from the many to the very, very few, and once you see it, you can't unsee it. To understand where we are, we have to go back to where this started. After World War II, America built something almost miraculous: strong unions, high corporate taxes, a bill that sent millions of veterans to college, and for a while, it worked. But then came the 1970s, oil shocks, inflation, stagnation, and a group of very powerful, very wealthy people saw an opportunity. Their argument was seductive. Government was the problem, not the solution. If you cut taxes on the wealthy, their wealth would trickle down to everyone else. If you deregulate corporations, they would create more jobs. If you weaken unions, the free market would take care of workers. They called it Reaganomics. Critics called it something else entirely. In 1981, the top marginal tax rate was cut from 70% to 28%. Regulations on banks, corporations, and Wall Street began to crumble. Union membership, which had protected wages for decades, began a long, steep decline. 1981 top tax rate, 70%, cut to 28% by 1988. Union membership, 35% of workers in 1954, down to 10% today. CEO to worker pay ratio, 20:1 in 1965, exploding to 3.990:1 by 2021. The rules of the game had changed, and almost nobody was paying attention, but this is where the story really gets dark. The 1990s brought the internet. The 2000s brought globalization, and both brought extraordinary wealth for some. Companies moved factories to China and Southeast Asia, laying off millions of American workers. Executives collected golden parachutes, workers collected unemployment checks. But here's the part the headlines missed. At the same time wages were stagnant, asset prices were exploding. Stocks, real estate, private equity funds. If you owned assets, you were getting richer every year, almost automatically. If you lived paycheck to paycheck, you had no assets to grow. Wealth doesn't just grow, wealth compounds. And compounding rewards those who already have. By 2008, the top 1% owned 34% of all wealth in America. Then came the financial crisis. Banks have gambled with people's homes. When the Bates went bad, the bill went to the taxpayers, $700 billion. That's how much Congress approved to bail out the banks. Meanwhile, 8 million Americans lost their jobs. 5 million families lost their homes. The banks recovered, the wealthy recovered. The working class never fully did, and then something extraordinary happened. something that would accelerate inequality to historic levels. March 16, 2020, the stock market suffers its worst single-day drop since 1987. Millions of Americans lose their jobs overnight. Small businesses shutter forever, the American economy stops. And then the Federal Reserve acts. It cuts interest rates to near zero. It pumps trillions of dollars into the financial system. It calls this quantitative easing. What it really was, rocket fuel for anyone who owns stocks and real estate. From March 2020 to December 2021, the stock market nearly doubled. US billionaire wealth grew by 70%. Elon Musk's fortune grew by 700%. Jeff Bezos added $75 billion to his net worth. Billionaire wealth overall grew by $2.1 trillion. Meanwhile, lowest-paid workers saw wages grow by about 3.4%. The pandemic didn't create this inequality. It revealed it. It accelerated it. And it made a truth that many Americans had always sensed painfully, undeniably real. The system doesn't work the same way for everyone. Something started to shift. A generation that had grown up in the aftermath of 2008, buried in student debt, unable to afford homes, started asking questions. In 2011, Occupy Wall Street put the phrase "the 99% into the American vocabulary. In 2016 and 2020, a Vermont senator's presidential campaigns drew millions of young Americans, not with celebrity, but with a message. The billionaire class cannot have it all while so many have so little. In January 2021, an army of small investors on Reddit took down billion-dollar hedge funds by buying GameStop stock. It wasn't just a trade, it was a statement. A labor movement, once declared dead, started to come back to life. In 2022 and 2023, more Americans went on strike than at any point in the previous 2 decades. Workers at Amazon, workers at UPS, workers at GM, workers at Hollywood studios. They weren't just asking for raises. They were asking for something more fundamental, a fair share of what they had built. Not everyone agrees on what the data means, or what should be done about it. Those who defend the current system argue, America's wealth creation has been unparalleled. That billionaires like Bezos and Musk created companies that employ hundreds of thousands. That taxing wealth too heavily discourages investment, innovation, and risk-taking. And that the rising tide, however unequal, has still lifted most boats. But critics, including Nobel-winning economists like Joseph Stiglitz and Paul Krugman, counter that concentrated wealth isn't just unfair. It's destabilizing. When most consumers can't afford to spend, the economy stagnates. When a handful of billionaires can outspend entire nations on political lobbying, democracy erodes. Oxfam calculates that the 5 richest men in the world doubled their fortunes since 2020, while almost 5 billion people got poorer. Warren Buffett, one of the wealthiest men on earth, once said, "There's class warfare, all right? But it's my class, the rich class, that's making war and we're winning. Whether you believe the system needs to be reformed or rebuilt entirely depends on who you think America is for." Let's make this simple. Here's how the wealth machine actually works. Step 1. The wealthy put their money into assets, stocks, real estate, private companies. These assets generate returns passively without lifting a finger. Step 2. When asset prices go up, they borrow against them, tax-free. The ultra-wealthy don't need to sell their stock. They borrow against it. And in America, loans are not income, so they pay no income tax on billions of dollars of value. It's called the buy, borrow, die strategy, and it's completely legal. Step 3. When they die, those assets pass to their heirs at a stepped-up cost basis. Decades of capital gains wiped clean, never taxed. Annual S&P 500 return, historical average, ugly 10% per year. Median US worker wage growth, inflation adjusted over the entire period from 2000 to 2023, about 9% total. The effective tax rate for America's billionaires, according to leaked IRS data analyzed by ProPublica, approximately 3.4%. Meanwhile, the nurse, the teacher, the delivery driver, the small business owner, they pay a higher effective tax rate than some of the wealthiest people on the planet. This isn't about punishing success. It's about asking, is the system we built still working for us? America has been here before. At the turn of the 20th century, the robber barons Rockefeller, Carnegie, Morgan controlled wealth so vast it dwarfed entire nations. The public pushed back, the government responded. Antitrust laws, the Federal Reserve, the income tax. The New Deal, the cycle of inequality was interrupted, a middle class was built, and America entered its most prosperous era. Today, the debate is louder than it has been in decades. Should the ultra-wealthy pay a minimum tax on unrealized gains? Should corporate profits be shared more equitably with workers? Should the carried interest loophole, which lets hedge fund managers pay lower tax rates than their secretaries, finally be closed? These aren't radical ideas. They are the same kind of questions every generation of Americans has had to confront. Because in the end, the question isn't just about money. It's about what kind of country we want to be. America built the most powerful economy in human history. The question now is whether the fruits of that economy will belong to everyone or just a few. So what should we take from this? 1. Wealth compounds. Wages don't. Owning assets is the engine of wealth. Without them, working harder alone rarely leads to getting ahead in today's economy. 2. Rules matter more than work ethic. Tax policy, labor law, and financial regulation determine how wealth is distributed. These are political choices, not natural laws. 3. History runs in cycles. America has faced extreme inequality before and changed course. It can do so again, but it requires an informed public willing to demand it. 4. Financial literacy is power. Understanding how wealth is built, borrowed against, and inherited gives you the tools to advocate and invest more effectively. 5. The system is man-made, and what humans made, humans can change. Every major economic reform in American history started with ordinary people asking extraordinary questions. Wealth inequality in America didn't happen overnight. It was built decision by decision, decade by decade, and it can be rebuilt. The same way, the first step is understanding it. If you think this can't happen again, history says otherwise. Next time, the story of the Federal Reserve, the most powerful institution most Americans know almost nothing about. The decisions it makes affect your mortgage, your job, and your savings. And almost no one voted for the people who make them. If that sounds like something you want to understand, subscribe and drop a comment. Do you think the system is rigged? Or do you still believe in the American dream? I'll read every single one.